Welcome to today's episode of Pharma Newsroom, your easy insights into all the biggest pharma companies in the world. We thank today's sponsor, Pharma AI Academy, your education partner for pharma.
Welcome back to the Deep Dive. You've given us some material to work with, and, well, our job is to dig in and figure out what really matters.
Exactly.
Today, we're zeroing in on Zealand Pharma, specifically their Q1 results for 2025.
Right, and looking at it mainly through an investor's lens,
Precisely. But really important up front. This is absolutely not financial advice. We're just unpacking the info from their company announcement and the interim financials you sent over.
Our mission basically is to pull out the key highlights, see what they tell us about the company's performance and maybe its future path.
And hey, stick around till the end. We'll tell you how you can support us and also get some great pharma-focused AI training over at Pharma AI Academy on YouTube.
Definitely worth checking out.
Okay, so let's dive in. The CEO kicks things off with a pretty big statement. Says Zealand Pharma is in a stronger position than ever. Financially, organizationally, pipeline, the works.
Yeah, that's quite the claim for Q1. What's your first take on that, seeing the actual numbers and news?
Well, it feels like that statement hinges massively on one thing.
The Roche deal. Right.
Exactly. They call it historic and transformative, the partnership for petrelintide.
It really seems to be the cornerstone of that whole stronger than ever feeling. It's not just some small collaboration. The scale looks huge.
Yeah, the ambition is massive. Co-develop, co-commercialize petrelintide for weight management, maybe even expand it, aiming for the leading amylin-based franchise.
That's a very clear strategic goal. And the structure, that 50-50 profit-loss split in the U.S. and Europe for petrelintide and the combo.
It's a CT388 combo.
Right. That signals real commitment from both sides, doesn't it? Plus, Zealand keeps royalties elsewhere. Adds another layer.
And the money. I mean, wow. Total deal, potentially USD 5.3 billion.
Yeah.
With milestones and everything.
But the immediate thing is that upfront payment, USD 1.4 billion expected in Q2.
That's going to completely reshape their cash balance.
No question. That cash injection, it gives them enormous flexibility. So connecting back to the CEO's point, this deal is clearly fueling that financial strength.
Provides capital and validation. Big validation.
Which is a powerful signal, to the wider market too.
Okay, let's shift to the pipeline. Obesity is front and center here. Petrelintide. They completed enrollment for that big phase 2. Zucciprimi 1. Incredibly fast.
3 months, they said.
Yeah, just 3 months. For a global phase 2, seems unusually quick, doesn't it?
It can be. Sometimes rapid enrollment means there's huge interest, from doctors and patients, maybe high perceived potential, or just a big unmet need.
Makes sense. And they've already started the next one, Zucciprimi 2, in April. That one's looking at overweight or obese patients who also have type 2 diabetes.
Right, broadening the scope. So, key dates to watch. Top-line data from Zucciprimi 1 and the wrap-up of Zucciprimi 2, both expected first half of 2026.
And those phase 2 trials for the petrelintide ICT-388 combo with Roche also plan to start first half of 26. Lots happening then.
Absolutely. Those readouts will be crucial. And the combo therapy strategy with Roche, interesting move. Trying to boost efficacy, maybe, or hit different aspects.
Okay, moving on. Gapaglutide. Top-line results from part 2 of the phase 1B. That's coming up very soon, right? Q2 2025.
Yeah, any day now, basically. And people will be watching closely, especially after the part 1 results.
What were those again?
Showed up to 8.3% placebo-corrected weight loss at 13 weeks. They're presenting that data at the ADA meeting in June.
The American Diabetes Association. So investors will want to see if the longer-term, higher-dose Part 2 data holds up.
Exactly. And if it does, they're looking to start a phase 2 trial in the second half of this year. Seems like they're ready to move fast if the data looks good.
Then there's survodutide, licensed out to Boehringer Ingelheim.
Right.
Big news there is the completion of enrollment for the phase 3 cardiovascular outcomes trial, synchronized CVOT.
Which means the whole phase 3 obesity program is now fully enrolled. That's a huge step.
Definitely a major milestone. Getting a phase 3 program fully enrolled means the trials are on track and the finish line for data is getting closer.
Yeah. Those synchronized 1 and MIDAS 2 results, expected first half 2026, will be key. They're looking at the core populations, with and without type 2 diabetes.
And we shouldn't forget the MASH trials either. Liverage and liver cirrhosis.
And the FDA breakthrough therapy designation for MASH, that's significant.
Shows potential beyond just weight loss, right?
Exactly. MASH is a serious liver condition, not many treatments. So that FDA designation suggests real promise. And for Zealand, well, that means more potential milestones and royalties from BI.
Okay, let's touch on the organizational side briefly. They appointed a new chief scientific officer, Utpal Singh, back in April.
Yeah, seems like a move to strengthen their R&D leadership, bring in experience to drive future innovation, especially with their peptide platform.
And they also brought on Dr. Stephen Smith as a senior global medical advisor for obesity.
Adds deep clinical expertise right where they need it most, guiding those big obesity programs. Smart moves.
Now, the financials themselves, Q1 numbers. Revenue was DKK 8 million.
Down from 15 million last year, yeah.
But the report stresses, this is mainly from the Zegalogue license with Novo Nordisk. And crucially,
The Roche money isn't in there yet. That hits in Q2.
exactly. So that Q1 revenue dip isn't the real story. Q2 will be the one to watch for the Roche impact.
Absolutely critical point for anyone looking at this. Focus is definitely on Q2 for that upfront payment recognition.
Operating expenses, though, were up. Negative DKK 393 million, or negative 415 million if you include the Roche deal costs.
Compared to negative 266 million last year, that's a noticeable jump.
But the explanation seems straightforward. Pushing that obesity pipeline forward in clinical trials costs money.
Pretty standard for a biotech in this phase, isn't it? Ramping up R&D spending, especially in a hot area like obesity. You have to invest to get the data.
And those Roche transaction costs are, a one-off thing.
Right. Cost of doing a big deal.
So the operating result reflects that spending. Matched DKK 385 million versus negative 256 million a year ago. But interestingly, net financial items were positive. DKK 70 million.
Up from 26 million, driven by interest income and fair value adjustment.
Can you quickly explain what those fair value adjustments might be, just generally?
Sure. Basically, it could mean the market value of some of their investments or financial assets went up during the quarter. So it's like paper gains on things they hold.
Got it. Okay, cash position. End of March, DKK 8.5 billion, roughly, down slightly from year-end.
Yeah, about 8,544 million compared to 9,022 million. A bit of cash burn from operations in Q1.
But again, the elephant in the room is the Roche cash coming in Q2. That changes everything.
Exactly. That 1.4 billion USD payment completely transforms the cash outlook. Provides a huge runway for funding development.
And looking ahead, their financial guidance for the full year 2025, it's unchanged from back in February.
Right. They're not giving a specific revenue number, just expecting revenue from existing and new deals.
And net operating expenses are still pegged at DKK 2.0 to 2.5 billion. That's excluding about 200 million in those Roche transaction costs.
So that confirms the plan. Keep investing heavily in the pipeline, particularly obesity. Provide some stability for investors, knowing the spending plan hasn't changed drastically despite the big deal.
The report also had that R&D pipeline chart. Useful visual.
Yeah, good snapshot. Shows what's where. Obesity, rare diseases, inflammation, partnered stuff, wholly owned stuff. Helps see the different stages and potential news flow.
Yeah, seeing that mix of wholly owned and partnered assets gives you a sense of their strategy, risk management, too.
Definitely.
Okay, quickly on the other areas. Rare diseases and inflammation. Glepaglutide for short bowel syndrome. They got a complete response letter from the FDA. What does that mean again?
A CRL, yeah. It basically means the FDA reviewed the application but can't approve it as is. They'll list the issues that need fixing.
So, not a rejection, but more work needed.
Exactly. And Zealand says they plan to resubmit to the EMA in Europe and start another phase 3 trial, so they're clearly not giving up on it. Addressing the FDA's points, presumably.
Okay. And dasiglucagon for CHI, they're ready to resubmit the NDA.
Right.
But it depends on a manufacturing facility upgrade. And looking for partners.
Right. And then the earlier inflammation assets, ZP9830 and ZP10068, moving along in or towards early human trials.
So stepping back from that investor perspective we talked about,
Yeah.
what are the main takeaways from all this Q1 info?
Okay, several things. One, Roche deal. Huge positive. Both the cash and the validation it provides for petrelintide. That's massive.
Right.
Two, strong progress in obesity, rapid enrollment, key data coming up soon for petrelintide and dapiglutide. That's where the near-term focus would be.
Yeah.
3, survodutide with BI keeps moving. Phase 3, fully enrolled. That generates value through potential milestones or royalties down the line.
Good point.
4, they're actively managing the whole pipeline, making strategic hires. Signals focus on the future, not just the current lead asset.
And the spending?
Well, yeah, 5, operating expenses are up, but that's expected. It's the cost of playing in the big leagues, especially obesity R&D, necessary investment.
6, cash position is solid now and about to get a massive boost from Roche. Gives them loads of flexibility.
Exactly. So investors really need to watch those upcoming trial results. Petrelintide, dapiglutide, survodutide, those are the key potential value drivers in the near to midterm.
And the other programs?
7. Rare diseases, inflammation. They offer longer-term potential, diversification, but, earlier stage carry the usual drug development risks.
So summing up our deep dive on Zealand's Q1 from that investor angle, we've got this game-changing Roche deal, solid clinical momentum in obesity, a soon-to-be very strong cash position, and continued heavy R&D investment.
That covers it pretty well. This quarter really sets the stage for a potentially very active period ahead for them. Lots of news flow expected over the next year or so.
And just to say it one more time, this was our breakdown of the info you provided. Definitely not financial advice. Please do your own homework. Talk to a professional advisor before making any investment choices.
Yeah, absolutely. And think about it. What really jumped out at you from this? What other questions does it spark for your own analysis? That's part of the process.
And if you want to dive deeper into pharma, especially how AI is changing things, do subscribe to Pharma A Academy over on YouTube. It helps us keep doing these deep dives. You get some really specific AI training for the industry.
It's good stuff. So, looking forward, as Zealand pushes through these trials and works with its partners, the next few quarters are really going to tell the story. Think about what those next big data readouts could mean, not just for the company, but for how these conditions are treated.